Perfect. Thank you all so much for joining the session. Love our faculty career impact session. Today we have our Associate Dean Lena Booth here. She will be sharing with you a little bit more about her personal journey, but then also definitely discuss strategies and tips if you're interested in exploring careers in finance. And with that, Lena, please take it away. Thank you.
Thank you, Helen. Well, nice to meet all of you. I know I already met some of you, so nice to see you again. We'll make the session very informal. It's a very small group, so whatever you like to ask, jump in at any time. We can make it your session, so ask any questions you may have. So first of all, I just in case you don't know my background, I've been teaching at Thunderbird as a finance professor for 25 years. Came to Thunderbird in 1995 and love it here. This is a great family that we're in. Small school, but a very big family. So everybody is treating everybody else as a family member. Doesn't mean that we have no fights. Family members have fights too, but I think overall everybody loves each other, and that's what's making Thunderbird so unique. 2 years ago, I started as Associate Dean and mainly in charge of our graduate programs. So all the MGM, trying to get all the different concentrations approved, trying to get all the in and outs of ASU, trying to make sure everything runs smoothly. So that's what I'm doing mainly now. And of course, MGM is one program. We also have the EMGM program. We have the executive program in DC, the Master of Arts in Global Affairs and Management. And then, of course, our MAM program, Master of Applied Leadership and Management, which is online. So, as I said, I have been at Thunderbird for a long time, has been a finance professor, since the very beginning. I kind of knew that I wanted to be a professor right after my MBA. So I didn't even try to look for a job. I just went straight to the PhD program because I know with the master's program, it's really hard to get a faculty position. We need to have PhD. So I literally just went from my MBA to the PhD without even thinking about trying to look for a job. So I know it's a different world when you have to look for a job after your master's degree, scrambling and so on. But I was lucky that way, but unlucky in the sense that I didn't have any income except for my PhD stipend. So remain poor for the next 3.5 years or so. But then I think it's a career that I really enjoy. So never really look back and wanted to be working in the corporate world. Corporate world has his challenges, has his rewards. But as a professor, get to meet lots of students, and it's a different kind of reward. It's not a monetary reward for sure. I have over the years, people were asking me, why don't you come to China? Why don't you just go into investment banking? Why don't you do this and that? But I've been here in academics for close to 30 years. So will be my 30th year next year after my PhD. But enjoy every minute of it. Really never regretted a career that is in academics because, as I said, the reward is very different. Seeing students getting good jobs down the road and, enjoy the class and learning about the different tools in finance, I think is a really big satisfaction. So, and the reason why I wanted to be a professor, I have always wanted to be a teacher. From very young. After high school, I decided, okay, maybe I should go try some teaching. I did that for 6 months as a substitute teacher and taught in first grade. I come from Malaysia, and after my high school in Malaysia, before we could go to university, in fact, actually, I did it before I even go to we call the A level, which is more like a junior college. And I did substitute teaching for 6 months because we have to wait for our results to come out. At that time, Malaysia, they don't grade their own, exam papers. You have to send it to Cambridge and then send back. because Malaysia used to be a British colony. So all the exams, they don't trust the Malaysian people to grade them. So even our teachers will not have a chance to grade them, like we have to send it over to Cambridge to get graded. But because it took a long time, it's not like you have email and all that these days. So they have to send it by snail mail and send it back. So usually it takes us about, actually more than that, about 4 to 6 months to get our results back. So during that time, I did substitute teaching, and I was teaching first grade, and it was a nightmare. I thought, I cannot teach first grade. I realized that the kids were, and I was young then, I was 18, and the kids were like running around. I didn't know what to do, and carry them back to the seats, and then other ones running around. So yeah, so it was difficult, and said, okay, next time when I'm teaching, I'm going to teach older kids. I can't handle first graders. So after my college in Singapore, I decided to try teaching again. So I did a substitute teacher as a high school teacher, because I was a substitute teacher. So they gave me like the worst students. Like over there, it's like each class is all ranked by your performance. The best students are in A class, the second best is in B class, and third best is in C class. So I had like an H class or something like that, right? So it was not very good. And I was teaching English, I was teaching math, and I was teaching PE. Imagine me teaching PE. I just can't imagine myself teaching PE. I can't even do a lot of physical activities. But that was what I was asked to teach. I managed to get through, but I felt like I'm going to teach college next time. I don't think I want to teach high school. They are not listening as much as I like them to. And so that's why, for my career, the whole time, I was always planning on, I wanted to be a teacher, but I just go each level up. So that's where I decided I need to do my master's, and then after the master's, realized that, okay, I can't become a professor if I don't get my PhD. So I ended up doing a PhD. I worked for a short time at Bank of America in Singapore. I didn't like the life because I felt like I have no life. I went to work every day at 7:00 in the morning, and I didn't get home till 7:00 at night. And I just felt like, well, my whole day is gone. I was exhausted all the time. I'm not a morning person per se. So getting up early to go to work is not my cup of tea. I would rather just do it until late at night. But that was just the nature of the work. And then I realized, okay, I think if I'm a professor, I can have a lot more flexible hours. I only teach certain hours. Other times I prep for the class, or I do research and can do it my own time. So I'm almost like my own individual consultant, right? That I can just do times at different times of the day. And I, some of you probably get email from me like late at night, because I usually work until pretty late at night. Just don't write me anything at 5:00 in the morning, because I won't be up. So so that's how I became a professor, just straight after my MBA to go for my PhD, and knowing what I didn't want to do, working in the corporate world. So that's always been my career. And as I said, I enjoyed being at Thunderbird, meeting all kinds of people from all over the world. I learned so much from students themselves, yourselves, on all the different aspects of finance in different countries, but also just life, just basically life. So Kunal is asking, can you describe one day during your time at Bank of America or any other financial institution I work for? Okay, so when I was in Bank of America, I was in operations. And at that time, this is a long time ago. At that time, Singapore was trying to put, I don't know how many of you have visited Singapore. Singapore has the subway system. It's called MRT, the Mass Rapid Transit. And at that time, I was working in operations. I was trying to find optimal locations to locate bank branches of Bank of America, because with the MRT coming online, they're going to have MRT. So there will be stations, MRT stations throughout all these train lines, and they want to find optimal places to put the branches. So I did a lot of optimization exercise. It's almost like if you've taken operations research class, optimization in terms of between distance, costs, and everything. Try to see, we don't want to put two branches, in two stations next to each other, right? So we want to have so many stations. What would be the most cost-effective way to do so within the train lines, the stops and things like that. So that's what I was doing, and exciting in some ways because it's something totally new. But I wasn't doing so much on loan evaluation or anything like that, which is one of the commercial banking activities. But I was just more in the operation side. Does that answer your question, Kunal?
Pretty much. Thank you so much.
You're welcome. So what are you guys thinking about you might want to do in the finance world? Are you talking about, are you all interested in finance, or you're just coming here because you like to see me?
A little of both.
I'm here because I wanted to see you.
Okay, thank you. So if we can talk a little bit about just career in finance. I usually like to just kind of categorize it under 3 or 4 big buckets, right? So first of all, most of our students who study finance here, they go to work. Says the host muted me, so I'm muting myself. I'm not sure who's muting me, but maybe Helen is you. That's okay. So what I'm saying is most of the students who are here, the students who graduated from here and work in the finance field, most of them work in corporate finance. They work for corporations like IBM, like Cisco, like Walmart, in the corporate finance side, which means that they help with the financial activities of the company. So for example, they help with trying to raise funds, short-term loans, long-term loans, or equity. They help with those. They help with the investment side. That means they help with trying to figure out whether this is something worth investing, do capital budgeting analysis, trying to find NPV, IRR, and so on. So students who go out and work in these companies, they typically will have to do investment analysis. Some of them were working at Intel in Oregon. Typically, as a financial analyst kind of position or associate position, you do a lot of financial analysis for companies, whether it's in the investment side, whether it's a good investment or not. All of you have learned finance. You all take at least 517, right? One finance course. Most of you are taking it with Michael Moffat. So you learn the tools to make investment decision, also financing decision, and also you do some financial analysis. So some of you are going through it right now, I know, who are first year, and others have gone through it. And a lot of corporate finance jobs are dealing with the stuff that you do in Moffat's class, right? And then some of you also took my Global Financial Decisions or Rob Grove's 522, which is Global Financial Decisions classes. And those involve a lot more multinationals that are doing business overseas. So they have a lot of currency risk, interest rate risk, and all these cross-border valuation, cross-border M&A. So all these are covered more in 522. So again, you have the basics in Moffat's class. That is what a lot of financial managers in companies are doing. So when you go to work for a company, sometimes in the interview, they'll ask you what's NPV, what's IRR, what's the relationship. So you're supposed to be able to explain that, right? So prepare that. I've gathered some questions from previous students that have gone for interview. So they asked them about IRR. They asked them about discounted cash flow valuation. If you were at my session this morning with the Excel, we talk about valuation. right? So they asked them how to do valuation. Even a student who ended up getting a job with Ernst & Young, right? And he was saying that he's in the valuation side, and that's what he has explained during the interview, how to do discounted cash flow valuation. So prepare some of the concepts, if you're going to interview for a corporate finance job, the concepts that you've learned in Moffat's classes or concepts that you've learned in my class or Rob Grove's class in 522, right? And Godsway said he has background in accounting, but trying to move completely away from that into technology and data and developing economies. So technology, so if you're moving into technology and data, so hopefully you're in the digital transformation concentration, then you get to do more data stuff, right? Our big data class, our global, or we have a class right now running is analytics and machine learning class. Hopefully you're in that too, Godsway. Are you?
Yes, I'm currently in the machine learning class, actually.
Great. Yeah, so those will be what you want to get into more so than the finance side of things. All right. So the AI and the global economy, and those are all good classes to take. So as I said, most of the students that come to Thunderbird, that end up getting a finance job later on tend to be in corporate finance. So for example, ExxonMobil hire finance students from here, right? I mean, they love to hire finance students. Many of them go into auditing position, internal auditor. And if you ask, and the people who come to recruit are our alums, and you ask them, why do they keep coming back to Thunderbird to recruit? They said, we need people to go to different parts of the world. And a lot of people that we hire from other schools are really worried about being posted elsewhere. Thunderbird students are the ones that said, when is my turn? When do I get to go? I really want to go. It may take 2 or 3 years before they send you somewhere else. There's a guy named Neil that he comes to recruit. Sometimes he's also a judge in our fraud defense. And he's like, I waited 5 years before they get me somewhere else. I kept thinking I must be doing something wrong. How come I didn't get to go, right? So Thunderbird students love to go elsewhere. Even go to Siberia, they still love to go. So that's why I think they kept coming back to Thunderbird to hire, our students. I know that the people who were hired, one of the guys that were hired by ExxonMobil last year, I think Matthew Mesa, and he said that, he's already on his pathway to go to Argentina, right? It's not right away, but he says they told him in 2 years. So then he can, his language is Mandarin. He says, now I'm starting to learn Spanish since I'm not being posted to China or anywhere, but to Argentina. So definitely companies that, yeah, you have Lena from Siberia, but I don't think Lena lives in Siberia now. She lives here. So definitely corporate finance is the most common path. And of course, that's not the only path in finance. That is also another one, investment banking, right? Investment banking, students will be doing, again, valuation is very important. In investment banking, there are different kinds of jobs. You can be a trader, right? Kunal was previously a trader in commodities, but you could be a trader in equities, in bonds. You could be in the trading desk, working in the trading desk. But most often, people who work in investment banks, they are working as a financial analyst or associate when they graduate from graduate school, usually start as an associate. So they do that. They do this valuation analysis. You see a lot of investment banks like Goldman Sachs come out and say, we predict what the stock price will be, right, for ExxonMobil. This is what we think the price would be, the price target, they say, right? And then people would just based on their opinion, whether to buy or sell, or even internally, they will advise their clients, this is what our analysts came out with. We think the price should be this, and right now it's undervalued, maybe it's time to buy, or right now it's overvalued, maybe it's time to sell. So the investment banks, they come up with all these analysis, and that's what's people who work in investment banks, especially fresh out of grad school, that's usually what they do. Or if you're doing M&A, they're putting companies together, right? Buying, merging the companies. So they have to advise their clients as to how to go about doing the M&A, or they have to find companies for them. So for example, if they feel like, you're in right now, the aerospace industry is very depressed right now because of COVID, because as you can see, a lot of airline companies were not doing well. Airlines are not doing well, then they're not buying more airplanes. Then it's kind of going down the chain, then the people who supply parts to the airplane, to Boeing, to Airbus, they're not going to be doing so well, right? Some of them may run into cash flow problem. So if you identify, if you have a lot of cash and you want to buy another company, and they identify a company to buy, so the analyst or the associate will be doing all these analysis, and then they will advise the company as to how much this is, what is the synergy gains that you can gain from here. So there are a lot of these things that they do it together. So those are the investment banking side of things. Investment banking is very hard to get in. Typically, Thunderbird students have a hard time, especially as the first job, to get into investment banking. The reason is we're out here, in Arizona. Many of the big investment banks, they hire from people in New York. They go to NYU, they go to Wharton, they go to, University of Chicago, but mostly NYU and Columbia and all these, because they are right there in New York, and these schools are in New York. And for them to try to fly out here to recruit, typically not very often. And even Goldman Sachs, when they come here to recruit, they recruit people in the operation side. They will go work in the operations rather in the front line doing the finance stuff. So investment banking, as I said, we tend not to have too many students get into that field right away. Some of the students who really wanted to do it, I've seen, they have moved to New York. And then in New York, they just try to network as much as they can. And, sometimes they land on the position. I remember there was an alum from years ago, just went to New York, and he was from Kenya. And then he just met some people and ended up with the job with Lehman Brothers. Of course, we don't have Lehman Brothers now. He left before Lehman Brothers collapsed, but that's sometimes happen, but not very often. They don't come here to try to recruit us in that function. Even ExxonMobil that try to recruit us in the controller function, the treasury, they don't recruit from here, which is more on capital raising and so on. So let me look at the chat here. Sheena said, I really hate numbers, but I know regardless of profession, we need to have some finance knowledge. So definitely, if you hate numbers, then maybe you don't want to make that your primary job function. Hopefully it's just some knowledge that you need to know. So even if you're not working in finance, you still need to have some knowledge so you can ask the right questions. You may not be the one that crank up the numbers, right? Hopefully you have a team of people that will do that, but at least you can look at the numbers, you understand what they're saying, if they're saying something, or you are able to ask the right questions. It's very difficult to not know anything. So if you become a manager and you have people who are doing finance and they have 1 0 less or 1 0 more, it could cost the company a lot of money and you don't know anything about it. Ultimately it's your responsibility. If you remember Enron collapse, 2002. Enron, if you have never heard of it, it was a very famous energy company. It was doing very well. We have many alums that worked there. It was good that it was not an alum that caused the collapse of Enron, but Enron collapsed because they were doing a lot of things which are very risky for energy company, and they were putting numbers in the wrong place. They just didn't manage the financial statements very well. So Arthur Andersen was the company that audited Enron, and Arthur Andersen, because of that, went bankrupt too, because they were just, nobody would want to do business with them because they didn't catch what Enron was doing. But anyway, so the CEO of Enron, his name is Ken Lay, and he was charged, for fraudulent activity with the company, saying that they are just messing up their financials and they were hiding some of the losses, so investors didn't even know about it. It was a publicly traded company. And so people were prosecuting him. He said, well, I don't know anything about finance. It's not my fault. I don't even know finance. So they passed a law, right? Sarbanes-Oxley, which you have heard. Basically, every CEO of the company is responsible for their numbers. So you can't say, I don't know anything about numbers anymore, right? And Ken Lay, before they can prosecute him, I mean, he was convicted, he died. He went to Colorado, somehow just died. So, I mean, at that time, people were thinking whether it was a conspiracy theory, whether he actually died or not. So, I mean, we all think that he's dead, but who knows? Some people say, oh no, he just pretend that he's dead and maybe he had already gone to a different country or something. We don't know. So officially he died, but the story was, he said that he didn't know. So they passed a law with the Sarbanes-Oxley saying every CEO of the company is responsible for their numbers, whether they know it or not. When they sign off something saying this is correct, they're personally liable. And if not, they can be put in jail, right? So answer your question, China, even though you may not be the person in charge of the numbers, but if you can ask the right questions and hopefully not get yourself into trouble. If you're not a CEO, maybe it's less of a trouble, but still a lot of things. I did have a former student long time ago. It was funny. I teach them how to use investment analysis. In fact, we went through one this morning to do to get into the spreadsheet so we can calculate NPV, IRR and stuff like that. And he did pretty well in my class. So he was helping me as a TA. And then he told me before he graduated, he says, I do not want to do finance. I want to go and find a job in marketing, in business development. I do not want to do finance. I said, okay, fine. It's up to you. Go with your passion. And then a few years later on, he said because he told me he just hates this kind of Excel stuff. A few years later on, he came back. He says, you couldn't believe I told you I don't want to do finance. Yeah, I'm not in a finance role. I'm in business development. And you couldn't believe I use the Excel spreadsheet that we use the capital budgeting spreadsheet all the time as in business development, or even in trying to tell people, hey, buy these from us. I was able to show the spreadsheet to them and say, look, rather than trying to convince them how good the product is, I actually show them from the spreadsheet by buying this product from us, how much value you can create, right? By looking at the NPV. So he says, you couldn't believe I told you I don't want to do this again, but I'm doing it every day in my life. So I say, well, you never know, right? Where it's going to take you. So, I mean, the stuff that we did this morning for some of you who were there. So what I'm trying to share is a lot of times you think that you don't want to do numbers, but the job functions you end up doing, you ended up to use a lot of Excel. Like, for example, if you're in brand management, you think that, oh, I'm in brand management, why do I need numbers? Well, they need to know if this particular brand is making any money, right? We have students who went to work for Henkel afterwards in brand management, and they said they end up doing P&L every day, because this particular brand, is it making money? What do we get from it? And how much do we spend on it? Blah, blah, blah. We need to find out whether it's profitable to have this brand. So a lot of jobs like that, you thought that hey, say bye-bye to finance forever, but it comes back and haunts you every day. So, okay, let me read some of the, so God's Way say, I love analyzing the stock market, but could be very challenging sometimes. So you're doing day trading right now. So, okay, about day trading. So day trading. Day trading is fun, but it's not investing, right? It's literally just trading. And the key thing about day trading is, you need to liquidate your positions at the end of the day. Otherwise, it's not called day trading anymore. And you have to basically make decisions very quickly. And a lot of trading, day trading, the fundamental analysis, that's what we look at, how good the company is or how well they're doing. All this is irrelevant because you're only investing for a day, right? You're only just buying the stock for a day. The company's, success cannot be shown in one day. And that's why fundamental analysis look at the company's long-term performance. So that's where you can see, okay, the company is doing well or the company is not doing well, it's going to go bankrupt. You'll be able to do financial analysis to kind of determine that. However, day trading, you don't. You just trade, you just base it on momentum, base it on what we call technical analysis. Look at the trends, like usually at the beginning of the day, this particular stock tend to go up, and then at the end of the day, they tend to go down. So you look at more technical analysis than the fundamental analysis that you learn in like the DCF approach. Make sense, God's way? So do more technical analysis, analyze. For example, if you're interested in a particular stock, let's say Apple, look at how the Apple performance is the day, just look at what is the price at the beginning of the day, what's the price at the end of the day for like a long period of time, and see seasonally whether it goes up or down. Maybe in December, it behaves a certain way. Maybe when they announce they got a new iPhone out, they behave a certain way. So look at more the trends rather than the fundamental analysis. Okay, make sense, God's way?
Yes, thank you so much.
So Camella said, I'm seeing that it's important to know how to understand what you're looking at and what the numbers mean for the company. So that's good. And that's what financial analysis is. If you are doing the 517 right now with Professor Moffat, your first case is basically financial analysis, right? Just looking at how the company is performing, the numbers, how do they look like? Look at some ratios. Are they efficient? Are they profitable? How do they compare with their competitors and so on? And Dongmun said, 1 year experience as investment banker at DBS. Frankly speaking, it was a short experience. Wondering what I can do to make a short 1 year experience. So you mean what can you do as a career with that experience?
I would say with the experience, just 1 year's, what could I do to go back to investment banking if I were to? Because after 1 year of experience, I did something else, but I kind of want to go back to investment banking. So, for people who has a short experience and maybe had a career swap afterwards, what could they do to what's efficient way to go back to the industry?
So going to graduate school is the first step. That's usually how they, especially if you want to switch career, back to graduate school and try to take more classes which are more valuation. Because when you go back to investment bank, when you were there at DBS, what is your role?
It was advisory for investment banking groups, IBG advisory. So it was just an analyst. Yeah.
Okay. So were you an analyst in the, were you trying to analyze stocks? Do you have a particular sector that you were concentrating in?
Yes, it was on renewable energy sector and heavy industries. Yes. And just did a research on that pretty much. Yeah.
So you might want to take the energy class that we have, try to strengthen your strengths in that area, because renewable energy, alternative energy, I think is very popular these days. So if you have deep knowledge in that field, then when you get hired, you can try to say, I want to be in this investment banking field in the renewable energy, right? So if you have the knowledge of renewable energy, you also have the knowledge of the finance knowledge with the valuation and all that, then you can be in the analyst position in that. You can be an associate, right, in investment banking. So if you cannot start at big banks, start with the boutique banks. There are a lot of investment banks which are more boutique banks, and the boutique banks typically has a particular area of expertise. So you could be helping with mergers and acquisitions in the renewable energy space. So some of the companies that have, they are doing oil and gas, for example, but they want to move into renewable energy space. Rather than investing on their own, they invest, they grow by acquisition. They want to get into the renewable space rather than doing organically from inside. It takes a long time. They can acquire a company that is in renewable energy, right? So you'll be able to analyze it. You can provide advisory that way. So position yourself with the finance and the especially the renewable energy, field, so that you can have the knowledge of both. And that will make you more stand out than a particular typical person that only knows finance or a person that only knows renewable energy.
Thank you, Dr. Booth. Can I ask you one more question?
Sure.
So, so for students who are from maybe a different country, or for students who are maybe not in the finance sector in the U.S. or swapping their career to a finance sector, would they need additionally to classes at Thunderbird? Do you recommend additional certificates like CFP, CFA, for example, that is, or CPAs, or etc., or SIE series, or
for investment banking, CFA may be more important than CPA. CPA will be important if you want to go into corporate finance. So I would say that, do some of those CFA kind of. CFA is also more in investment. So that's the other broad category I want to talk about. I talk about corporate finance, I talk about investment banking, right? That's also investment. So investment and investment banking, sometimes we kind of lump them into one umbrella. That will be more like you work for Fidelity. So they're investing people's money. How do you form portfolios, diversified portfolio? So for example, our ASU Foundation has a lot of money, $3.6 billion, right? So they need to be able to invest this money so that the money can grow to provide scholarships to students. So some of the money, they don't just go away. The principal is always there, but they get the return. So let's say you have $1 million, 5% return is 50,000. Typically, when we ask a donor to donate $1 million, we say 4 to 5% of that money will be used for scholarship, and your money every year will generate $40,000 to $50,000 for scholarship for the students. So because they have all this money, they need to produce the return in order to support scholarships or some other programs. Then they need to invest their money wisely, right? So the investment side, so our foundation has investment professionals that invest the money that people donate that is housed in the foundation. And the money, they have to form a very diversified portfolio. You don't want to put all your eggs in one basket. You don't want to put all the money into one stock, but they don't even just put into one category of stock. They put into stock, bonds, private equity, alternative assets. Some of them are like alternative assets are like real estate. Some of them are like gold, rare coins, or now cryptocurrencies. So form a diversified portfolio. So you need to know how to optimize your portfolio so you get the lowest risk and the maximum return, right? And a lot of times it's very difficult to get the lowest risk and maximum return because low risk means low return. However, you could try to target. You say, I want this particular level of risk. So at this particular level of risk, I want to make sure that I get the maximum return. All right. Or if I'm targeting this particular return, let's say 10%, then I want to make sure my risk is the minimum. So this is what the investment professionals are doing. They are doing portfolio management. They are trying to find investments that will make sense. They put the portfolio together, make an optimized portfolio that get them either the lowest risk or the highest return possible. All right. So some people work for the foundations and some people work for Fidelity. So these are the investment side of finance. That's another avenue for people to go into. So we are going to offer a course next semester called Responsible Investing. Basically, it's sustainable investing. So that would be more like that kind I just talked about. you will have to form a portfolio. And we got, I don't know, $800,000 to $1 million from the foundation for students to manage this fund, because we also want to focus on more sustainable kind of investing. So it'd be more like companies that are very focused into ESG or sustainable development goals. So that's where you're going to be looking at these companies, looking at these organizations, or sometimes it's government agency that offer the bonds, and then come up with what you think foundation money should go into. All right, so it's a very hands-on course. I'm still working with this guy from New York to try to get the course description and everything ready. So it'll be offered in the C session, 1 day a week. We are still discussing what time. So it's something that you can consider if you're interested in the investing side of things. Okay, so this is not just investing, we will be doing investing in sustainable companies or organizations. So who will be teaching, Kunal is asking, is the guy named Ashok Parameswara. So he is the founder of a nonprofit. It's called the Emerging Markets Investor Alliance. He used to work for, big banks and investment banking, but he now is advocating more investors to invest in sustainable, more sustainable companies that's focusing on ESG. So now he becomes more like an advocate for it. So he was telling me, he said, I gave up my big bucks, career to start this nonprofit. And Sanjeev was the one, Dean Kagam was the one who persuaded me to do so. So I said, okay, blame him for the money. So he's going to be teaching that class. I'm working with him. I mean, we've been going back and forth for 2 months trying to kind of come up with the angle for the course. So that's the investment side. And then the other side is the commercial banking side. Commercial banking, investment banking, we're talking about Goldman Sachs, JP Morgan, these are investment banking. But commercial banking, we're talking about the banks that you put money in, right? Like Wells Fargo, like Bank of America, Chase, all these are commercial banks. So commercial banks, what do commercial banks do? They collect your deposit and then they lend out the money. That's how they invest, right? They get their capital from you when you put money in the bank, but then they use the money to invest. So they invest by different ways. They lend out the money usually. So if you want to buy a house, they loan you money to buy a house, right? Or you want to invest in a business, they lend you money to invest in the business. So their investment is literally loans which are given out. So people who work in the commercial banking side, they most often do the loan credit analysis, whether a particular customer is worth to be given credit, right? So there's the 5 C's of credit, so you need to kind of know that. And they will look at the financial statements of the companies, and they will do ratios, to make sure that the companies have the ability to pay, because the 5 C's of credit include the capacity, the collateral, the condition of the economy, right? So all these different capital, how much assets do they have? So all these are all things that they have to evaluate before they can give out a loan, right? So people who work in commercial banking tend to be more bank officers. So like one of the graduates from 2 years ago, he went to work for HSBC in Singapore. So he was in charge of emerging market loans, for HSBC. And like he's the head of that division in charge of all the loans that they give out to emerging markets, so that people, they will be able to evaluate and see, oh, this is a good customer or not good customer. This is not very similar. This is not the same as microfinance. Microfinance is like they give loans $500 or $1,000. These we're talking about a company that may be borrowing in the millions, right? And then you're doing analysis for them. So this is more in the commercial banking side, or some people can become a branch manager, just in charge of the whole branch. That's also possible, right? So that is more in the commercial banking. And then the other one I want to talk about is private equity and venture capital. Private equity and venture capital is also another more finance-focused field. And some of you may be in this class called startup investing, right? So you are acting as if you are like an angel investor in startup investing, because we do have an incubator that has money to invest in startups. Or when the startup has got some beta product or whatever that they can showcase, then they may be getting money from venture capitalists. So the venture capital and private equity, they're investing in private firms. So for them, they will evaluate whether the company is worth investing. So it's quite different, because a lot of times, if you notice, for venture capitalists, when they invest, they tend to invest in people more so than they invest in the product. So if they invest in people, then the financial is not as important. But in private equity, it's very important, because they need to know after they get this company and put a lot of debt in it, when are they able to sell it, turn it around, sell it, and get their money back. And most of the private equity venture capital, their investment horizon is not very long. 3 to 5 years is what they hope they can, sell and get out, right? Some of them, they didn't get to do it and becomes like 6 to 8 years and 10 years. But their fund typically is 10-year long. So they don't want to drag it all the way to the end. So that's also another field. But private equity and venture capital, they're very, very lean. Their operation is very lean. So they only have maybe 8, 10 people in the organization, sometimes less. And then every time they need some expertise, they just go and get consultants to do so, right? So some people could be working in private equity as investment advisors or investment professional. So they will source all these different companies. And then when they need somebody, they will get a CEO. I mean, we have seen so many private equity. I used to teach a private equity class that they already got a CEO in mind. They say, okay, the CEO had just retired from this company, but he's still young and active. I'm going to take this person and I'm going to look for a company that this person has expertise in. I'm going to buy that company, and I already got a CEO to replace the existing CEO. So it's an acquisition as well. So mergers and acquisitions is not only done by investment banks. There are a lot of private equity firms also do acquisitions, but for them, mostly the acquisitions are private companies. Or if they invest in public companies, they buy the public company and take them private. Some of you have Dell computers, right? So Michael Dell, together with Silver Lake private equity firm, they took Dell computers from a publicly traded company to a privately held company, private owned, right? So they do that. So the people who work in private equity also need to do all these analysis to make sure that the company really has value, how much can they pay for? So valuation. That's the Excel thing that I did this morning. The discounted cash flow valuation is used so much in finance in so many different fields. In the corporate finance side, in investment banking side, private equity and venture capital, they're doing that as well. So knowing the valuation, discounted cash flow valuation, and that's also another valuation that's called multiples approach in valuation. Knowing all this will help you in a lot of different fields in finance.
Lena, based on your past 20 years of kind of just looking at all the T-birds, how many of them do private equity and venture capital once they graduate from Thunderbird?
So it's very difficult to get into private equity and venture capital right after you graduate. I probably see only a handful, not more than 5. Because those for the private equity venture capital, they are, as I say, each company only has 6 to 8 people, sometimes 10, right? They're very few. And those people who get to go there directly, they are, what do we call them? Associate. They join as an associate right after grad school. Those typically already have some relationship with the company, with the private equity. Either they are, so we have a graduate, his uncle has this private equity venture capital firm that's really quite well known. so it's a no-brainer. He works there afterwards. And some of them, they, I don't know if you guys know of venture capital investment competition, right? We have this VCIC, and we're looking for the people to represent Thunderbird again for our competition in February. It's a regional competition. So I've asked Rebecca Huang, who's teaching our startup investing, to look for, to try to put together a dream team, because I think people in her class, I think it makes perfect sense for people in her class to do so. So I have heard previously people who went into this venture capital investment competition ended up meeting some VCs, because the VCs are the ones that, the real VCs are the ones that are judges. So after that, they also have networking events. So they get to meet with the VCs, and VCs really like them, and then they get the job with that VC afterwards, right? So a lot of times it's opportunities, because they're not big, so they don't train you. If you go to work for a VC or private equity, you are either swimming and float or you sink, because it's not like a lot of companies, big companies, they have this leadership development program. They put you all through all these things and you decide. This one is like they throw you into the ocean. Either you swim or you sink. So that's just how the nature of the industry is. Other questions? So it's also a very difficult industry to get in. Earlier on, I think Dong Moon said, yeah, you work in the investment bank. Most of the private equity firms, they hire people who are ex-investment bankers. So they figured that if you have been an investment banker, you have gone through all this deal making, right? Trying to bring buyers and sellers together, because for them, they are also trying to invest. So getting deals done is very important. Being able to demonstrate that you have the ability to get deals done. You identify a company that you want to purchase. How do you go about doing it? How do you evaluate whether it's worth buying? All these things, and then finally get the deal completed. If you really know how to do that, then they felt like they don't have the bandwidth to teach you. They want you to already know how to do something like that before you come in. So people who are in the investment banking field, and they were helping with some deal making in the investment bankers' life that they had before, they tend to be the ones that go mostly to private equity.
Kunal, you are muted for a second. Do you have a question?
Yes, I did. I
Yes.
thought maybe I can ask about the over-the-counter trade to Dr. Booth, if she can talk about a little bit on that.
The what again?
The over-the-counter trades, like forwards.
So are you talking about careers in that, or what?
Yeah, so I'm talking about career in, let's say, forwards department of any of these global banks.
So a lot of global banks, they provide different kinds of services, right? So some of the services are helping with risk management. So when you have to hedge risk, it depends on what kind of risk. You may have currency risk, you may have interest rate risk. So that's more in the investment banking side of a bank. So here in the US, we have investment banks separated from commercial banks, whereas in Europe and some other countries, they have what we call a universal bank. That means they are all together in one place, right? In one bank, they are doing everything. They're doing the investment banking side, hedging side. They're doing the commercial banking, taking your money, deposits, and giving out loans. So they're all called the universal banks. Whereas here in the US, we tend to separate those functions. So what you're describing, a lot of that is done by the investment banks.
I have a question that's not related to finance.
Okay.
You are, having this successful career, family life, work life. Now you are just such a respectable executive, how do you balance? How do you have it all?
Good question. Now my daughter is old, so at least I don't have to deal with children, which is easy, or a child. I only have one daughter. Earlier on in my career, when my daughter was young, I tend to work a lot at night because, a lot of times you kind of make yourself known and say, okay, I don't have any childcare arrangement. So at the beginning, I had my daughter go to Boys and Girls Club after school. So I was able to, stay in school for longer. But then later on, she's too old to go to Boys and Girls Club, right? But she's still young enough and, can be driving home, not like, 12, 13, things like that. So at that time, I basically just tell people, okay, when you schedule classes, make sure that nothing is after 2:00. My daughter gets out of school at 2:00. I need to pick her up. And so I was able to manage that and then get her home, homework and stuff like that. And then I start doing my work, after when everything is done with her. So I tend to work a lot at night. That's why I said I rather work at night than early in the morning. But it's also the nature that I'm used to that since, I didn't have time doing that after 2:00 to about 8:00 time. So I tend to work after 8:00 after she goes to bed. So that's how I balance it. And then, of course, sometimes you do miss things, right? So I remember my daughter has the first concert. I think I can't even remember what she was playing, a flute or something. I missed it because I was traveling in Korea at that time, right? So sometimes you do miss things, and then just hopefully, your child is not scarred from that. So you kind of learn, right, to balance things. Sometimes you do ask for, and that's why I like my job, because it allows me to take off during the day in the afternoon and then just pick up my stuff, pick up my work at night. So not a lot of careers are like that. So I think the easiest to manage career-wise or work-life balance with family, I think is being a professor or a teacher, because you do have that half day, right? And then you can do your work later on. So now sometimes, that is just my husband, and sometimes my husband goes to bed, I'm not in bed yet. And then when I wake up in the morning, he's still in bed. So it is, sometimes you just have to deal with it, and he understands. So you just need to talk about it. And of course, it all depends on whether the spouse understands or not. Some of the spouses probably don't, but if you get a spouse that understands what is important, and then you can make it up other times, right? When you're less busy.
Thank you. We have a final question, Dina.
Thank you, Helen. Hi, Dr. Booth. I have a question. So I'm not a finance concentration. And as a matter of fact, I think finance was one of my most challenging courses at Thunderbird, but I learned a lot. So I'm studying marketing, and I'm finding more and more throughout my marketing courses that the better equipped we are at finance, that we'll be able to better articulate our points and get our points across in the marketing field. So what advice do you have for marketing concentrations and getting a better handle on finance? Is it that we perhaps take another finance course before graduating, or should we read, or is there any resources you suggest we undertake before getting out into our careers?
Yeah, finance, has a lot more stuff that maybe a typical marketing career doesn't require. Like, for example, a lot of stuff that we deal with in risk management, let's say, hedging and things like that. I think in marketing, you probably don't get into that much of that stuff. What you get into in marketing is the finance in your first finance class and accounting. First, finance and accounting, knowing how to read financial statements, knowing how to do some financial analysis, do investment analysis. As I said, the marketing side, right? If you go to FedEx, right? They say a lot of times to sell things, you just show people the financial analysis, how this is creating value. Most people like to know, how is it going to add to my bottom line? How is this going to help? And brand management, is this brand making money or not? It's for P&L, profit and loss statement, right? So that's more like accounting. So the other accounting class that I say will be useful is TGM 512. It's called managerial accounting. Managerial accounting does more stuff that I think will benefit a marketing person than the more deep dive into very, hardcore finance. So if you want to think about taking another class, I would advise you to take TGM 512. It's called managerial accounting.
Thank you.
You're welcome.
Awesome. Thank you, Dr. Booth, so much for having this session and being part of this with us today. I really appreciate you being here. And as some of you may know, I am the one that's in charge of the Faculty Career Impact Program. So next month, we're actually going to have Professor Rebecca Huang and Professor Glenn Edens. But if you have any faculty members that you really like and you think would be great to do a Faculty Career Impact Program session with, please reach out to me. You can email me, you can WhatsApp me, I will receive it and I will try to get them on the schedule for next semester. But everyone have a great rest of your day and stay safe and healthy and have a wonderful weekend.
Thank you all, and
Thank you.
have a very nice and safe weekend. Bye-bye.
Thank you.
Thank you.